Hello, everybody. Andrew, thank you very much for your invitation. As I thank always your father, Kevin, that I start my career together with him. Ladies and gentlemen, uh, about 10 days ago, I was invited to give a speech in the North Bund Forum, which is a famous forum for in Shanghai. Uh, and the audience over there was not as specialized as you are here. But I was trying to figure out and to give an example to understand how and why Shanghai has become a very important place for the shipping finance. And I said that if you will go to Europe and you will understand and you will feel how the flow of finance is going as a, and it can be seen from the heart, from the knock of the heart, you can hear a rhythm like this. This is what is happening in Europe on the flow of shipping financing, how the heart of shipping financing is knocking there. If you go to the States and you go to Japan, it goes like this. And if you will come to Shanghai, it goes like this. A lot of money. And not only a lot of money from different sources. And this is something that I wanted just to share with you to understand that we do respect all the financiers of the world of the place of Shanghai, and certainly we anticipate we anticipate that this center of shipping will increase from now on. Anyhow, I will start my presentation by, of course, all of you, you know that we are still on demand. The shipping industry that accounts almost 90% of the world's trade volume and nearly 3% of the global greenhouse gas emissions, with emissions escalating by 20% in just a decade, and is undergoing a green transformation. We are in the crossroad of the green transformation. But as shipping heads towards a full decarbonized future, sweeping changes are expected that will greatly boost the sector's impact on global climate and ocean action. Decarbonization is one of the major dilemmas. Green energy has been proven to be very disruptive in recent years. So shipping companies are called to explore alternative fuels, including hydrogen, LNG, ammonia, HSFO, nuclear power, LSMGO, and whatever you want. Until the new green fuels are delivered, there is not much more they can do. With new technology regulations constantly enforcing changes, many questions have troubled the shipping industry worldwide. Such restrictions by the IMO, other management bodies, and countries have led to technological advances and the development of costly machinery. These regulations have often required the implementation of new technologies and equipment in order to reduce the environmental impact on shipping. The road to a green future is long and arduous. The journey towards a more sustainable maritime future must be integrated into wider national and international agendas, supported by a significant boost in investments. The shipping industry must invest in new vessels, fuels, and infrastructure to achieve its 2050 climate goals. But there is still a massive funding gap to 2030 and major uncertainty over regulation and technology. Shipping stakeholders must mobilize significant capital for clean vessels as well as engine retrofits, and energy-saving technologies. Leveraging this ambition to reach net zero, the shipping and finance industry must work together to accelerate sustainable shipping finance. Look at here what we have to face. UNCTAD Review of Maritime Transport 2023 urged to take action and system-wide collaboration to decarbonize maritime transport. The report warns that the decarbonizing shipping could cost over 100 billion per year as the emissions continue to increase. And of course, this figure not only necessitates collaboration, but we have to determine what is this collaboration. Shipping, as you know very well, is a capital-intensive business mostly financed by banks and shipowners' equity. The growth of the global fleet continues to be funded by banks and non-banking sources such as leasing, alternative lending, private equity from funds, public markets, and investors. Banks and financiers have started to invest in sustainable shipping, but a large funding gap remains. The major problem is that there is not consensus on which fuel will power shipping in future. Several options are on the table, but they all require different technologies and, of course, different vessels. Institutional investors, from what you can see in this slide, have turned to less risky investments, while the volatile nature of the shipping market still causes pause for thought. The total issuance during the last 12 months amounted only 9.16 billion. On the other side, accelerating carbonization in the 90s and the early 2000s propelled the shipping industry into a boom cycle. Banks, especially in Europe, you remember well, seized the opportunity to lend to this thriving industry. However, the 2008 financial crisis, sent stakeholders through the global economy and severely impacted shipping, while the banks faced significant loan losses, particularly in Germany. In the aftermath of the financial crisis, banking regulations in many countries were updated to enhance financial stability. Given its volatile and cyclical nature, the shipping industry was considered again high risk. Many banks, especially those in Europe, opted to limit their exposure or even to exit the shipping market. However, bank lending remains an essential source of capital, as you can see from the graph, for shipping, representing approximately 62% of the global ship finance. We grew up the last 30 years by saying that that bank financing it was up to 90%. Now we are at 62%. European banks, although still account for half of global shipping bank portfolios, their shipping portfolios declined, creating an opportunity for new financial players to enter the shipping finance market. Asian and Australian banks, for instance, have seen their market share to increase from 15% in 2010 to 45% in 2023, as state-backed loans offer attractive loan terms to support national shipbuilding industries, and especially here in China, but also in Japan and in Korea. The bank shipping finance faces new challenges nowadays. From the one side, as interest rates rise, shipowners have used their high liquidity to prepare their bank debt. And again, we have bankers that they are crying, particularly in Greece, I can tell you, that they say, okay, we are producing new loans, but we have our portfolio is reducing. Why? Because everybody is going to repay because the shipowners are so rich. Funds engaged also in lending have begun to increasingly include ESG criteria. with a strong preference towards sustainability loans and vessels engaged in renewables. The Basel IV new guidelines becoming effective in 2025, whereby asset financing such as shipping will require more capital allocated for each loan. This and other regulations coming into effect may well undermine a bank's ability to offer low loan margins and may give a further advantage to leasing and sustainability-linked bond structures, which are not subject to these regulations. Loan terms for eco vessels are better than for non-eco vessels. So leaving the challenges, let's see, on the leasing side, we have witnessed that over the last 10 years, ship leasing has become a very significant competitor and a serious alternative to bank finance for the provision of ship finance. Over here, 90% of the people are involved in the ship leasing, in the leasing. It was characterized by the presence of long-term charters which underpin the shipping risk. The ship leasing market size is estimated at US $14.8 billion in 2024 and is expected to reach almost double the 27.97 billion by 2029, growing at a CAGR of 13.6% during the forecast period 24 to 29. And still, there is always a complaint, particularly from major leasing companies in China, that they cannot cope with the growth of the demand of new financing. The Asia Pacific region is anticipated to be a major growth driver, with countries like China, Japan, and South Korea leading in ship ownership and supply. These nations have seen increased shipbuilding activities and initiatives in countries like Vietnam aim to enhance intra-Asian trade routes and attract foreign investment in new ships. Over here, we can have a SWOT analysis that I'm not going to go through anything because in any case, you are going to receive the detailed analysis. But I want to outline the strengths that we are moving now and we are living now in this sustainability era. We have put a title on our new strength, on how we are going to move on. And what is the word is we have, I mean, the last 5 years, 6 years, we have always in our mind this decarbonization. Now we, the financiers, we say sustainability. I don't know what's going to happen next year. European banks still support the industry being customer relationship oriented, increased appetite from Asian leasing companies. Japanese banks figure more prominent. To our surprise, non-bank lending is showing considerable high growth, awareness for shipping sustainability, and strong liquidity by ship owners. These are the strengths of the market. I'm going to go directly to the, if I can say, to the threats. And today is a very big day because almost in about a few hours we will know who's going to win the American elections. But but certainly the geopolitical challenges is a real threat, as the institutional investors have turned to less risk investments. Strict banking regulations reducing financing flexibility. Environmental technology and new fuels. Many new building orders, especially on the LPG tanker, LNG, car carriers, and container sectors, was increasingly financed by leasing companies and not by banks. Leasing companies have not been tested in shipping markets downturn. And this to me is the most significant, if I'm allowed to say, a threat that we are facing. because so far everything has been very, very well. I mean, don't forget that here in China we start this leasing structures from the mid of last decade, and particularly after post 2016. Since then, everything is fantastic. It's paradise, but we have not faced a downturn, and early prepayments affect banking portfolio, as I said. So you will have a lot of time to see the W and O's. Because I don't have time a lot, I'm going to turn it to green finance is a rapidly growing industry in China, reflecting the country's commitment to reducing its carbon footprint and promoting sustainable development. Echoing the central government's decarbonization goal of reaching a carbon peak before 2030 and carbon neutrality before 2050, China attaches great importance to the role of finance in green and low carbon transition, putting in place a multi-tiered green finance market system with outstanding green loans and bonds, both ranking among the top in the world. In 2023, ladies and gentlemen, green finance has been mentioned in several high-level policy documents and by China's presidency to support China's green economic ambitions. Yet progress in policy and green finance application have been mixed. Just to mention few of the latest developments in green finance landscape in China. China Classification Society has joined forces with several Chinese maritime industry companies to launch the Sustainable Shipping Innovation and Development Initiative, the SSIDI. Chinese shipping banks have already launched ESG-linked ship financing projects and leasing companies. Bank of Communications Financial Leasing, China's biggest ship leasing finance company, confirmed that green lower emission ships now comprise about 50% of 18 billion portfolio. In a specific paper published recently, Dr. Sheng Shu and Dr. Ke Gao from the Ocean University of China, Qingdao, pointed out that green finance drives to the transformation of maritime industrial structure, promoting innovation in marine science and technology, and raise people's awareness to environmental protection. Their research concluded that green finance transforms the marine economy from high speed to high quality development. Ladies and gentlemen, with just 6 years to go until 2030, the deadline to achieve the Sustainable Development Goals is quickly approaching. The greening of the maritime sector is a game-changing opportunity to deliver a multiple SDG targets, as every dollar spent on more sustainable shipping also represents an investment in climate resilience, ocean protection, clean energy transition, and wider development agendas. Collaboration and coordination among partners, both in the maritime sphere and beyond, will ensure that the sector plays a critical role in achieving global climate action and ocean protection. It is time for all of us to get on board the journey towards a greener maritime future. Thank you very much for listening to me, but I will conclude by saying one of the reasons that we, the Association of Banking and Financial Executives of Greek Shipping, we opened an office here in Shanghai is because we believe on the collaboration. The next step is to have an office in Europe, and the next step afterwards is to have a third office in the North Americas. Something between Canada and the US, not to be always in the big countries. Therefore, we sincerely believe of collaboration, and we believe of exchanging these ideas on how we're going to move from now on. And the Marine Money Conference is giving this path to exchange these ideas. Thank you very much.